Hello, 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 everyone. Thank you for joining me on this Monday. Hi, everyone. My name is Andrea Wilson. I'm the broker and owner over at Brick House Realty. We're a full service real estate brokerage here in Northeast Ohio. We work with buyers, sellers, and real estate investors. Obviously, we want to work with you. We want to help everyone that's out there. So I like to come on here on Mondays. I talk about your real estate update, kind of like your real estate market Monday update. And so today's topic, we're talking, if you've been following a little bit about the real estate, you might have realized that last Friday, HUD, Housing and Urban Development, released some news, some good news actually, for folks with student loan debt. So through the FHA product, they want to try to remove some barriers that have been preventing people from becoming homeowners because of student loan debt. So I'm going to share that information with you guys today, what you need to know. When does it take effect? So stick with me so we can get started here. All right, everyone. So I am back. We're going to be talking about the new changes to the FHA loan requirements as it relates to having student loan. We work with so many people that have student loan debt, and the way that they calculated the student loan debt, for some, it kind of put them out of the housing market, not able to purchase a home, still having to remain as a renter. So we have the pleasure, if you're here from Cleveland specifically, but here in Ohio, the Secretary of HUD, who is Marsha Fudge, she had taken over when the Biden administration kind of moved in. She's here from the Cleveland market, so we're proud of that. But she announced this past Friday. And so just to kind of recap, what she said was that home ownership is the cornerstone of American dream and is the best way to build generational wealth. I'm proud that FHA is taking action to make it easier for borrowers with student loan debt to qualify for federally insured mortgages. So your federally insured mortgages are going to be your FHA loans. A lot of you have heard of FHA, your VA type loans as well. So previously, just kind of give you a recap. So previously, when someone would go out to get a mortgage, what would happen is what the lender would use to kind of pre-approve you. They would look at, obviously, your credit report, see what kind of debt and everything that you have out there. Well, for a lot of people, one of those line items on your credit report is going to be your student loan debt. So I work as a housing counselor too. So because I do work as a housing counselor, my other hat. So what we do is we help people become mortgage ready. And so I'm constantly reviewing credit reports, and the amount of student loan debt that's out there it's amazing. So what happens is you have folks that have, we'll just say, $100,000 of student loan debt just kind of sitting out there on their credit report. Now, because of COVID, a lot of the student loan debt, those payments that you had to make maybe have been on deferment. So when your student loan debt is on deferment, that's really a positive for you in one sense. It's positive because it's not reporting negatively on your credit report. It's just kind of there, sitting there. It's not giving you positive credit, or it's not impacting your credit negatively. So you just have it just kind of, sitting out there. So what happens when you decide that you want to now purchase a home? If your student loan debt is deferred, then that lender has to take 1% of that loan amount to say that that's what you owe on a monthly basis. So if you have $100,000 of student loan debt, they would take 1% of that, which would be $1,000, and say that that's the monthly payment that you have to make. right? So for a lot of people, I don't know many people that would be able to take the burden of $1,000 loan, student loan payment. So it's not that you actually had to make that payment. They kind of looked at it as, if worst case scenario, if they make you make a payment, it's going to be about 1%, $1,000, right? So they factored that a home that you can afford. So when they look at your debt to income ratio, they're saying, okay, this individual has $1,000 a month student loan payment, even though you're not making this payment. It's deferred. For some people, it's going to be deferred for a long time because you might still be in school or whatever the reason is. So they would take $1,000 of your student loan payment. If you have a car note payment, they would take that. We'll just say $500 in car note payment. And then if you had credit card bills, they're going to look into that. And then everything else that would factor into it. Well, now you say, I want to now purchase a home. So now they're saying, okay, on top of that $1,000 car note payment, and all of that, now this person wants a home. And so it was either knocking people out from being able to purchase a home, or they would say, okay, we can get you approved, but we can only get you approved for a, $70,000 house, which is crazy if you think about it, because a lot of you are making rental payments already, right? So you're not really making $1,000 student loan payment, but then you're paying rent. Some of you are paying $1,000, $1,500, $1,700, $2,000 in rent every month. So you're already making the payments, but they don't consider like your rent payments and paying those on time into consideration at all. So that's a whole another conversation to be had. But when they layer in and say, like in this example, $1,000 of student loan payment a month, you can't. Where am I going to live for that? So then you end up being stuck as a renter. Well, these new guidelines, and I printed this to make sure that I explain this correctly. So the old way was they were taking either the greater of 1% of the outstanding balance of your loan, the monthly payment reported. So you could bring your loan out of deferment and get onto a monthly payment plan. But the problem with the monthly payment plan that was being set up was that so say you owe $100,000, but your monthly payment, you just got on like an income driven repayment plan or some sort of small repayment plan. So say that was $50. If you were to make $50 payments, and how they looked at that, they wanted to see the loan kind of zero out within a certain time frame. And if that loan didn't zero out, then that would cause a problem for you too, if you even if you had a payment plan set up, right? So they wanted to make sure that the loan was going to fully amortize, and then for some people that it just wasn't going to work. So the changes, right? So these new changes they say can take effect immediately. So if you already have a pre-approval in place, then you want to go back and talk to your lender. So some lenders may say, we're not going to roll it out until a certain date or time. But then that's when you might want a second opinion at that point, if the student loans is impacting your approval. So that if they can remove that piece of it, you might qualify for a little bit more, be able to purchase a little bit more. And that might be important to you right now because the housing inventory is so low. A little bit more money could put you in a different bracket and some other negotiating opportunities for you as well. So with the new guidelines, it says for outstanding student loans, regardless of payment status, like you can either have a payment plan or it could be deferred. So regardless of payment status, the mortgagee must use the payment amount reported on their credit report or the actual documented payment when the payment amount is above zero. So you could literally have a $1 student loan payment. You could literally have a $1 student loan payment. So you worked out payment arrangement, it's $1. That lender is now going to have to use that $1. They will not be able to use the 1%. So in that example, you could have $100,000 in student loan debt. The old way, they would take 1%, which would say you have a monthly bill of $1,000 a month for your student loans. The new way says if you are in a repayment plan, and even if that was $1, that same $100,000 in student loan debt, if you worked at a payment plan, the lender said $1 payment a month, that's what the lender has to use. $25, that's what they have to use on there. So it says, or 0.5% of an outstanding loan balance when the monthly payment reported on a borrower's credit report is 0. So if you still have it in deferment, then instead of it being that 1%, it would be 0.5%. So going back to the example, for $100,000 of student loan debt, they're now going to use 0.5. So that would be $500. So before it was 1%, now it's going to 0.5 if you don't have a payment plan. So what I'm saying through all of this is if you are in the process of looking for a home, you currently have an active pre-approval, you have student loans you have student loans that's impacting the amount that they were willing to give you. You want to go back to that lender and find out what time frame that this is going to kick in for them. So HUD, FHA, they said that it's effective immediately from their standpoint, but lenders have until August 16th up until that point of when they have to start using this new model. So they can hold off until August 16th to kind of roll this out. I did talk to one of the lenders that we work with frequently, and they said that they are going to change over immediately as well. So it's good to hear that lenders are starting to roll this out. So this is really good, guys. You know, you want to now talk about having some sort of repayment plan set up, and the lower the better for you in terms of when you're trying to get a home. So if you want more information on this, I'm happy to share. And let's talk about those FHA. It says all FHA approved loans is what it's looking for on here. Is who can benefit from all of this. So if you guys have any questions, I just want to jump on here, give you this information. It's important to know what's going on. This is a huge win for folks with student loans. There's many of you that's carrying so much student loan debt, $50,000, $100,000, $150,000. On top of, you have some folks have their own personal student loan debt, and then if you had kids, and some of those loans are going on to your own personal credit report as well. It's really racking up in numbers wise. Aside from that, pay attention to what's going on in the student world, forgiveness, and what government is doing. I know they rolled out something where it's like a $10,000 forgiveness. Not everyone qualifies for it, but you want to look at that, see if you can qualify. There is always the nonprofit. If you work for a nonprofit, then there's a student loan forgiveness that you can also tap into or apply for that will take off almost like $10,000 a year over a certain period of time. There are some other little requirements that go along with that, but definitely we want to try to minimize or get that balance that's owed down with some of these products that are out there. So you guys, I hope you have a wonderful Monday. Thank you for checking in with me. Share this out. You never know who may need some information. They have student loans. They're trying to buy a home. For many of you, you can afford it. It's just the guidelines that are set is preventing you from being able to own a home. So you can afford it because we see what you're paying in rent. And you're paying those rent payments steady on a regular basis. So hopefully this new information will help you out. I'm happy to answer any additional questions about it. And you guys enjoy the rest of your Monday. Thank you for joining me.